For the first couple of years, we're looking at about somewhere between 3.5 million ounces of silver per year the first 2 years. But on average, for the first 5 years, we're at 3.1 million ounces.
This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz, and company we've been working with for quite some time. I'm a shareholder of, sponsor of the show, and really interesting silver company that is going to be producing very shortly in terms of probably beginning to mid-summer, and that is Aurcana Silver Corporation. We're really pleased to have with us the CEO, Kevin Drover. And Kevin recently relocated from Canada down to Colorado in December to actually oversee initial production and all the millions of details that go along with that. How's that been going?
Good to be here, Kerry, and thanks for having us on. Things are going very well. We're progressing. We've got about 130 people on site right now, 110, which are our employees, and about 20 contractors. And we're focused, of course, on doing the underground development. That's the key to getting ourselves into production, of being able to source our production ore. So, the big focus right now is to get that completed. We're targeting ore coming out of the mine right at the end of July, beginning of August. We're still on target for, give or take a week from where we said we were going to be sometime back. We have about those 20 contractors on site. They're mainly assisting with the mill mechanical works that we've got to do. We've got some reinstallation of equipment. We had decided to upgrade the flotation circuit. We doubled the capacity of that. So all that is chugging right along and pretty much on target for where we said we wanted to be cash flow positive in late third quarter, early fourth quarter of 2019. So, we're 6-7 months away from production here.
Right. And any surprises that have come along besides COVID, besides weather? We can't control for those things. But as far as the actual pre-production work that's taking place, has you been surprised by anything?
No, not really. There's been a couple of pleasant surprises, I think, but there's been really no negative surprises as such. We thought labor would be getting qualified miners would be a difficulty, and that was certainly brought up in the early days. But we've been very fortunate. We've been able to get some really, really good miners on board, and we're pretty much staffed up right now for the mining work that we've got in front of us right now. Equipment deliveries have been pretty much on schedule and as we expected. The one maybe negative surprise that we got was the price of steel pretty much ballooned quite a bit, and that's added some extra dollars. But we're still pretty much within budget and on target.
All right, and so cost to actually complete the mine. There haven't been any nasty surprises other than steel on the upside.
Yeah, that's correct. Now we're in the middle of doing a rescheduled cost to complete as we speak right now. Just looking at where we are, do another forecast, and we do these periodically. So we're in the middle of doing that now, and we don't expect, from what we can see right now, any major surprises from what I just said in terms of schedule and cost. So but we'll get that done and report if there's any significant discrepancies, but I really don't think there will be.
Great. And the weather hasn't been too bad, although you mentioned there's a snowstorm coming up this weekend.
Yeah, there's a big one coming in this weekend that might cause us a shift or two delay or whatever the case may be. There's been a couple here that we've had to deal with, and we've lost a few shifts and whatnot at the mine, but really nothing that we didn't already plan for. In fact, in our budgeting, we had planned for about I think it's close to 50 days of downtime due to weather and things like that. And that's all built into the feasibility study and the cost estimate. So it won't be anything untoward.
It must be exciting watching this mine that the naysayers have said for years, the veins are too narrow, you can't economically produce silver, and you're about to prove them all wrong.
We're here to prove everybody absolutely wrong on this, and we've got great hopes for here. You know, we've gone in with test stoping to mine these narrow veins. We know we can do it. We've done 4 different runs on this, and we've been able to do it quite nicely. So I am not concerned about that at all.
When I last spoke with you, you were talking about a cost of production somewhere around $8 per silver equivalent ounce. We still on track for that?
We're still on track, although we did an update last year, and we didn't publish the update on the feasibility study. But when we ran the numbers on that, what we saw was an increase in labor costs. We saw a decrease in capital costs, but an increase in labor costs. And that's proven to be correct. We've had to pay a little bit more than what we had anticipated to get the quality labor that we have here currently. And that's taken our all-in sustaining cost. We believe it's probably going to be closer to $9 an ounce as opposed to the 8, but very, very low. We're in the lowest quartile of all-in sustaining costs for sure.
Yeah, and with the quality miner you're getting, should get some higher productivity out of them as well.
Yeah, and we're seeing that. We started out, our productivities were, not what we had expected. We've seen a steady increase now as we brought on those quality miners, and we continue to, improve on productivity on a daily basis. But, we're not very far off of where we expected to be. On some days we're well ahead. Some days, you have bad ground conditions or whatever. But generally speaking, that all speaks to the schedule. So if you're, the productivities is what allow you to achieve schedule and so on. So we think we're pretty much on schedule. So, obviously productivities must be pretty good.
Yeah, that sounds encouraging. So the mill capacity is 500 tons per day. Take us through first year production and what you're expecting thereafter.
Yeah, so the feasibility was designed at 270 tons a day. The mill is designed for 500 tons a day, but we're going to start up at the 270. We want to be able to settle the mining, our productivities, our metallurgy, our cost profiles. So we'll start up at that 270. We anticipate being there, say, for that first year, but right now we're working on a plan that will allow us to first step up to 410 tons a day. We're looking at the sequencing of development that we need to do. And we're looking at the cost of that development and how long it's going to take us and so on. So, you have to do all of those things up front. So we're now, although we're prepared to go to start up at 270, we're preparing for that second year to get ourselves up to a higher production number. And then, in a year beyond that, another step up to that 500 tons a day. But we got to do the planning and we got to do the work behind that. So we're in the process of doing that right now.
All right. And how much silver are we expecting for the first several years?
For the first couple of years, we're looking at about somewhere between 3.5 million ounces of silver per year the first 2 years. But on average, for the first 5 years, we're at 3.1 million ounces. But, with the additional tonnage that we're looking at as that step up, we're hoping to improve that as we go forward.
Yeah, and it's always better to surprise on the upside than the downside. So you have to be conservative here.
Yeah, well, exactly. You don't want to be coming out and telling everybody you're going to be doing things that they're not realistic and too expensive. So we like to do the technical work behind the scenes and get it all done. We're pretty sure we can get this thing to 500 tons a day ultimately, but we've got to do that technical work.
Right. And of course, you're well financed to accomplish all this. So you don't need to go back to the markets again, right?
No, we're in good shape. We've got $46 million in the bank as of right now. And of course, since we last talked, we raised some money and we had in excess of 50 million. But we've spent some of that, obviously, in terms of progressing the project. So we feel very good about where we are. All of our major pieces of equipment, virtually all of our equipment is ordered. The contractors are working and, getting the mill ready to go. We're targeting the mill ready for startup by the end of June. We could probably get it done before that, but, with the mine not being ready to supply ore until, late July, early August, not much point in pushing on that. So, but, all things are clicking, the way that we pretty much thought.
Right. Now, there's some, I guess, concern over a 7-year mine life here. How accurate is that 7 years?
That's very much on the low side. The work that we're doing, as a matter of fact, we're doing it this week and probably next week as well, is looking at taking the life of mine here, into the decades, not just, 7 years kind of thing. So we're quite optimistic that we'll be around for literally decades in this mine here. We've got all kinds of exploration potential on the Virginius vein, which is where we're going to be mining first. To the north, there's at least 10 years mining to the north on that vein, and to the south as well. And we have some excellent, historical information, assays and the vein widths and so on, that really support that. But again, we've got to do the technical work behind all of this, but we're very, very confident we're not going to be a 7-year mine.
So one thing interesting that I heard you mention previously, I think under Colorado law, if the vein comes up on your property, you're allowed to follow it kind of wherever it goes.
Yeah, Colorado has apex law, which means if you own the apex, you can follow that no matter where it goes, whose claim it is, whatever. So we're in good stead. We've only been talking really about this one vein that we're going to be mining, which is the Virginius vein, but we have 8 other veins, most of which, if not all of which, have been in production previously. And we haven't even touched any of these, as a matter of fact. So we've got a tremendous amount of targets from an exploration perspective. Another thing that we're doing right now is trying to get these prioritized and put plans to each of, what work do we want to do? How much is it going to cost us? And then we can see, how much money we have that we can allocate to, the highest priority of these targets. We've got consolidation prospects right around us. The Ruby Trust, the Camp Bird, all of these are up for grabs and whatnot. We've got Shafter that is looking better and better every day. We're just doing a new resource on Shafter, and we'll hopefully be updating that to a 43-101 compliant, and it looks very, very prospective at this stage of the game. We're looking at the possibility of doing a drill program down at Shafter to expand the resource and as well to get metallurgical samples to do a feasibility study. So we got a lot of stuff going on here, not just building the mine, but hopefully the things that we can get into the market that will be very positive for Aurcana.
Yeah, and for those of you not aware of Shafter, that's down in Texas, fully permitted mine. It was producing not that long ago, right? 2013, it shut down as metal prices dropped. So, yeah, we're looking at it's a brand new resource. We're not going to look at trying to go in and mine the old remnants kind of thing. This is pretty much a brand new ore body that's never been mined. So, we need to do that a little bit again, the technical work, a drill program, confirm a few things, get metallurgical studies, and then initiate a feasibility. But, we could have Shafter online probably within 24 months, 18 to 24 months, something like that. So, with I guess the way we're looking right now is we're starting up at that 3.2 million ounces a year. We're looking at sort of 2022-23 to be up closer to 5 million ounces a year, and then another step up beyond that to 6.5 million.
And by that time, hopefully we'll be ready to bring Shafter online with another 2 to 2.5 million ounces. So, in the next 2 to 3 years, we're targeting in the range of 8 to 9 million ounces of silver production.
Excellent. And obviously, some of the last raise that you got from the last placement is going to bring Shafter online, and hopefully that much quicker.
Yeah, well, that's certainly, some of that money was targeted for feasibility and drilling program and those kinds of things. The last estimate we had to bring Shafter online was about $22 million. So, we'll be up cash flowing by then. So we should have sufficient funds to be able to bring Shafter online, although it's a little bit early to, speculate on that just yet.
Obviously, you've got to cash flow before you can do anything. You've got to prove to the market that they were right to bet on you, which I have done personally, and all the major obstacles have been cleared now. It's kind of full sail ahead, right?
Yeah, exactly. Our focus, and we're laser focused on getting this thing into production, in the third quarter of this year. So we don't want to do anything that's going to distract us from doing that. So, that's our job one right now, is get ourselves into production. We can do some other things as, concurrently with that, but we don't want to lose sight of, our objective here is to get in production.
All right, one final question. Oh, and by the way, if you haven't checked it out already, go to aurcana.com, AURCANA.com, and sign up for notifications so you'll be one of the first to know when production takes off. And for U.S. investors, go over the ticker symbol is AUNFF on the OTC, and on the TSX, it is AUN. So make sure you check that out. Really, it looks like the stars have finally aligned for Aurcana, and we're expecting great things out of you.
Well, we certainly are, on target to deliver this project into production, and I think that'll be a great catalyst for our share price and our shareholders on a go-forward basis. So that's our job right now, is to get that done.
All right. So again, Aurcana.com, ticker symbol in the US, AUNFF. In Canada, it's AUN. Kevin, we'll be talking to you again shortly. Thanks so much for coming by.
Thanks, Kerry. Good to be here. You take care. Bye-bye.
The Financial Survival Network.